Welcome back to our live coverage of the World Economic Forum, 50th anniversary of this forum, by the way, in Davos, Switzerland. And joining us now is John Tuttle. He is vice chairman of the New York Stock Exchange. We see you in New York. We see you in Switzerland. Good to have you here.
Great to be here.
I've so much talk about what's the IPO market going to do this year? What unicorn is going to go public this year? What exchange are they going to go public on? Just from your perch at the NYSE, what does the pipeline look like for IPOs this year?
You know, taking a step back to last year, when we were in Davos, we weren't even having IPOs. Remember, the government was shut down.
Right.
I believe we had one IPO in the first quarter of last year.
I remember that conversation we had about that.
Exactly.
Because they needed time to prepare. You can't just flip a switch.
Right, the filings
That's
and all
right.
that, right. And then towards the tail end of the year, you started to see that correction in the private markets slow down the number of companies that were looking to go to the public markets. So as we look out to this year, I mean, we're looking at a healthy IPO market, at least for the first half of the year. If you look at the deal pipeline, there are companies from across geographies, across industries that are looking to come to market starting as soon as this and next week.
So, John, is it a different environment now? I mean, are we sort of post-unicornish after some of the, tepid aftermarket performance of the big names and the WeWork unfolding debacle perhaps still? Is it a different time now?
I believe it is, and for a couple of reasons. One is that investors are focusing more on a sustainable pathway to profitability. They're looking at other metrics aside from rapid top-line growth when thinking about valuing and investing in companies. The second is that even the tone of the dialogue here at Davos is shifting. And so in years past, whether it be in Davos, in Silicon Valley, in New York, everybody talked about the burdens of the public markets and why you don't want to be a public company. And now you're hearing more and more about the benefits of being a publicly traded company, both for companies from, the ability to access capital to fuel growth and gain liquidity for your investors and shareholders, but even with the theme of Davos this year in stakeholder capitalism, which I would argue is not a new phenomenon, but it's spreading and saying, how can the public markets and public companies benefit society as a whole and allow for more inclusive economic growth?
I think you just asked yourself that question. But I'm curious, is there a plan set in place there with Stacey Cunningham as president and you as vice chair that how do you plan to do that and to sort of get the message out that capitalism really isn't a dirty word?
No, I think that is exactly what we need to do, is continue to get the word out about the benefits of the public markets, both for the company and some of the benefits I spoke about earlier, but the financial and governance discipline it places on companies as well. And if you think about just NYSE-listed companies employ 45 million people directly and tens of millions more indirectly. And the ability for companies to access capital to fuel that growth is a good thing for society more broadly. And also allowing investors, whether they be institutional or individual investors, the ability to participate in this growth and earlier on in their growth cycle is a message we're getting out there.
John, I want to ask you about China, and there's sort of at least two tracks here. One, of course, is the administration doing a little saber rattling when it comes to Chinese companies listing in the U.S., number one. Number two, also the opening up of the exchanges in China and the liberalization of rules in Hong Kong and in the mainland. So what is your take on both of those?
So China is a very interesting marketplace for us. I mean, it's been an interesting market for over 30 years where we've been bringing companies from China to the NYSE. And if you look at the IPOs from outside the United States taking place on our market, number one on that list is still China, in spite of everything going on in Washington, D.C. We expect to see that continue. Obviously, China and Hong Kong want to do the most they can to make their capital markets more competitive with the United States. But if you look at the breadth and depth of capital markets, the U.S. markets are unmatched. And so you're still going to see companies, despite broader trade and political rhetoric taking place, seek to come to the U.S. markets.
Quickly got to ask, are we going to see more direct listings, especially from some of the larger tech companies?
Oh, I would love it. So we obviously helped pioneer the direct listing with Spotify. We had Slack. And so we expect in 2020 anywhere from 4 to 6 companies to realistically take that direct listing path. And you may have seen that we filed recently to change our rules at the exchange and work with the SEC to get approval on those changes to broaden the universe of companies that would be eligible for a direct listing and to allow for a potential capital raise as part of a direct listing, which would be a new product offering and could transform the marketplace.
Gets interesting. All
right.
It
does. John Tuttle, Vice Chairman of the New York Stock Exchange, thanks so much for joining us.
Thanks for having me.
Thanks.